Hey everyone, it's Luron here and welcome back to my channel. Guys, in today's video I want to talk about the S&P 500. Now I've been getting a lot of questions lately about whether the market will be going up or down. And in this video I'll be touching on four key areas that's driving a bullish case for the overall stock market. So if you're someone that is looking to invest in the stock market, you already invest in the stock market, you're a trader, and you want to know what exactly is going on with your portfolio, then you certainly don't want to miss this video. So without further ado, let's jump right into it. So I'm sharing my screen here. So I'm showing the SPY. Now this represents the S&P 500 or SPX. I like to use the SPY because most of my trading, when I trade the S&P 500, I use the SPY. So for this video, I'll be looking at the SPY in my discussion, which pairs the S&P or the S&P 500 SPX. So let's jump right into it. So the first one, guys, is the VIX. Let's show you the VIX here, guys. This is the volatility index. As you can see here, when the market is crashing, VIX usually is spiking higher, meaning there's extreme fear within the market. So for example, back in 2020 with COVID, you can see here the VIX took off from 16 all the way up to 85 within a matter of weeks. And when the market's fear is going away or dissipating, the VIX or the volatility index would come down. So this is what we have here for the past couple of years. As you can see here, from 2021, VIX was in a range of 36 to about 18. Right now, the VIX is just hovering about 1834, and it's clearly in a downtrend, as you can see right now. So because the VIX is in a downtrend, that's an indication that the overall stock market isn't fearful of anything, despite of everything that's going on in the world. High inflation, the war in Ukraine, all of that crazy stuff. Because what the market does, if you follow the Dow theory, you know that the market discounts everything. So stock prices reflect, consider everything that is going on in the market. So the market is always 6 to 9 months ahead of everyone else. So when you see the news talking about all the bad things that's going on within the world, the macroeconomics, the stock market is usually ahead of all that. All that is priced in. So with the VIX trending downwards, and usually when VIX is below 20, you're talking about a market that is primed to move higher. So that's the first reason that I have to indicate that the overall stock market will be moving higher over time within the next 3 months, well, for this entire year, unless something out of the ordinary shows up that would put a wrench in the market. So let's jump back to the SPY. So that's the number one reason. Number two reason here, if you look at my technical analysis here, the market created several key support levels since back in early 2022, let's say March. You see we made a nice head and shoulder. We had a key support. Here, July all the way to October, the market had another key support, which is the same angle as the one created earlier. Now, looking at the same angle that was created earlier, the market is in a nice head and shoulder formation right now, looking at the daily candles. And I expect this market to go sideways within the next 2 to 3 weeks, sideways, and make one pullback lower. Now, this pullback lower, a lot of folks are correlating this market with the market crash of 2008. And they're thinking that once the market pulls back, it can, fade off and go lower. That's a possibility, but my thesis right now, based on all the indications that I'm looking at, is telling me that this market will pull back, touch this support right at 380, or that would be 3,800 on the S&P 500, and then the market will move higher. So, like I said, within the next 2 to 3 weeks, expect this market to move sideways and move lower eventually. So maybe not a week sideways movement, and then we can start to see within the next 2 weeks we move lower, touch this support level. Now, if we break this support level, that spells trouble for the market, because we could probably come all the way back to about 350, create a double bottom, either move lower or we move higher. But the best case scenario that I'm looking at based on technical analysis is that we'll move sideways, move lower, and move higher out of this head and shoulder and this overall triangular wedge that we have set up here right now. So that's the second reason. The third reason is the CPI. I'm sure most of you have been following inflation, because you're paying more for everything, for gas, for food, for living, you name it, you're paying more. Now, we had high inflation back in 2022, we had inflation peaking at 9.1, and as you can see, since then inflation has been triggering lower. We had 8.5, 8.3, 8.2, 7.7, 7.1, and the last December reading we had 6.5, which was just announced last week, I believe. We had a 6.5. So that's exactly what the Feds are doing. The Feds are raising interest rates, and that's to help control or curb inflation, and it's working. Inflation is trending down right now. So the stock market likes that inflation is moving lower, and if inflation continues, which we expect it to do, continue to move lower, that's exactly what the overall market is expecting. And if that happens, the overall market will go higher. So the stock market hates high inflation, but loves lower inflation. Low inflation means everything's controlled, businesses will continue to perform and hit their the bottom and top line accordingly. So that's my third reason. The fourth one is the war in Ukraine. Now, when you look at the news and you hear of all the atrocities that's going on in Ukraine, you're thinking, the market might still be crashing because of the war. Like I mentioned earlier, the stock market discounts everything. So the market already discounted the war in Ukraine. The only thing that would make a major change in the overall trajectory of the market when it comes to the war would be, let's say Russia uses maybe nuclear weapons. That would be a turn of events for the stock market. But if the war is just what's going on right now, they're killing each other in the Ukraine, they're killing the Russian soldiers and vice versa, and the war is just going on status quo, the market doesn't care. I mean, it's sad to say. I mean, people are losing their lives, which no one is happy about. But the stock market consider this as neutral, and they'll continue to go on about their business as usual. So those are the four key factors or reasons why I believe the overall stock market will move higher within the next 2 to 3 months. But we're talking about February, sometime February, mid-February to late February, we can see the market bottom at this key support level that I showed here, about 280 or 381, or in the S&P 500 language will be 3880, and then we move higher. How much higher? That's something else to debate, but the market, I believe, will move overall higher. So if you enjoyed this video, subscribe to the channel if you haven't already did that, and until next time, we'll talk later. Bye.